Yo, what's up gang? Welcome back again on this YouTube channel, IpBoyles FX. In this video, I'm going to teach you guys the best supply and demand strategy that you can use in trading volatility index pairs. I'm going to use VIX25 index to show you guys how perfect this strategy works. Before you trade this strategy, you must make sure that you can analyze structure. You know when market is going down and when market is also going to upside. If we are to analyze this trend, we will see that VIX25 index is on uptrend on daily time frame, which you can see that we are on 24 hours, which is our daily time frame. So how do you draw your supply and demand, which I'm going to teach you guys how you can draw your supply and demand on this video. So let's say that we are on uptrend, the market is going up, giving us high highs. So it's giving us higher highs, impressive move. So if you want to take a trade, you want to see that market, let's say you want to take a trade, market must give you a compression, understand? So that compression is what gives you an edge to trade supply and demand. So what are you going to do? This, let's say that this is our demand zone, which you want to take your trade off. You want the market or the price to push inside the zone before you can take trades, which what I mean is that you want price to push inside the zone before you can take your buy setup. So that's what I mean. So once it push inside, gives you your confirmation or any of your confirmation. If you use a change of character or you use a candlestick rejection week, so anyone you use, the only thing I'm advising is that always wait for a good confirmation before you can take trade of any demand zone or any supply zone. And if you are trading demand zones, you must make sure that price is giving you high highs, high low. What I mean by high highs, high low, the price is trending, it is on the uptrend position or uptrend direction before you can trade your demand zone. So if you want to trade your supply zone, you must make sure price is going down, it giving you lower lows, lower high, lower lows, lower high. So what do I mean by price giving you lower lows? Price giving you this lower lows, understand? Lower high, lower lows, lower high, lower lows, lower high, lower lows. If you want to take for the upside direction, so I'm going to change it. Let's say this is a downtrend market, it gives you a lower low, lower high, lower low, lower high, lower low, lower high, lower low. So when you will be taking your trades, you only be taking your trades only on supply zones. That's where you only be taking your trades. So if you're watching this video right now, all you can just do is to just subscribe to this channel and share to your friends. Once price is giving you lower lows, lower high, lower lows, lower high, it's breaking lower structures. You must make sure that price breaks lower structure before you take trades on a supply zone or any demand zone. Yo, let's go. So let's say you want to, let's change this to upside. So the upside is giving you higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, and higher low. So you'll be taking trades from your demand zones. Demand zones are your opportunity to give you buy setup. Demand zone So if you are trading from demand zone, you trade with confirmation once price taps to your zone, because these have to be an impressive move and the return have to be on correction. That's what makes your demand zone very valid. The price must come with weakness. That weakness is what gives you confidence to take demand zone, to take trades out of demand zones. So after that, it gives you a impressive move. That impressive move breaks your higher high structure. So after breaking the higher high structure, it gives you a little bit higher low, higher highs, then come back. So once it's coming back, you want to see a compression of price. So price compress, tap to your zone, you go to your 15 minutes or your H1 time frame to wait for a confirmation. Price must always give you a confirmation. If it doesn't give you a confirmation, please don't take trade. So what confirmation am I talking about on this? You just want to see this type of price action or price play out. You want to see this low, you want to see this once price is coming to your zone, gives you a low, then break to the outside with a good candle, then come back. So if price come back on the retracement, that's when you'll be taking trades. So it gives you a trade, what we call a sniper position. So that sniper trade is what we want to capitalize from. So if you are taking trades from this zone, let's say that you have a 4 hours zone. Let's say you have a 4 hour zone around here. That price is going into the zone. You want to see price push into that zone, break the higher structure, the 15 minutes or your 30 minutes or 1 hour higher structure, which we call a change of character. So once price change character, you want price to return to that zone. So if price is returning to that zone, you also want to draw that demand zone, or you can call it order block zone. So that is a strategy. This strategy works best on all volatility pairs. You can use it to enter some sniper entry, or the only thing you can use it on swing trading. You can also use it on any day trading or scalping trading. So all you just need for price to do is for price to give you that higher high structure, then compress, come back to your zone. You go to your 15 minutes time frame to take this trade. So this trade is like a sniper mode. When price touch this zone, you go to 15 minutes time frame, then once it gave you this confirmation, you take your trade with a small stop loss, and then it will sniper. Your target have to be on the previous high or the previous low. So I'm going to invert this back to the normal state. So for sell is also the same thing. So let's go to the chart. Let's hit the chart. Price is giving us a higher highs, higher low, higher highs, higher low, and higher highs. So let's say you want to take trades. What are we seeing when we go to our VIX25 index? You will see that you made price at this point, and this is called a demand zone. You want to draw that demand zone out. So one price meets to a demand zone, it rejects. So that's the work of supply and demand. So I'll be going more in depth on this course, on this supply and demand course, structure and other things. If in our next course I'm going to go more deep about it. So let me extend it to the week. It have to be on the week. It have to be on the week. So you trading supply and demand doesn't mean that you take out your other strategy. You can also confluence it with more trend line, psychological levels, and other trading strategy that you use. But the basic is that you know how to draw that supply and demand zones. So let's say that you have this high, understand? Then price come back. You see that price is coming back with compression. So when you go to your, let's say you want to take this trade, we go to our H4 first, then to see how the zone is. Let me go to my H4. We want to see how clean the zone is in our H4 before we can take any trades from that zone. I'm going to reduce the zone. See that price returning to this zone, it gives us a liquidity which I'm seeing, and the upside liquidity which price is going to run to the upside. So you always, when you're trading supply and demand, you also identify these liquidity grabs, because if you don't identify liquidity grabs, you are going to, your stop loss is going to hit, or you are going to enter on early trades before the trade moves to your direction. So we see this liquidity as trendline liquidity. So once price taps to this zone, this 4 hours zone, so in a daily time frame it covers all these whole zones. So when I go to my 4 hours, all I do is to reduce the zone to a smaller size. So we can see that price tap to it, break this 4 hours trend low, which is our change of character. This is where we anticipate to see as a lower time frame confirmation. So if we go to our, let me say we go to our H4, let's go to our 30 minutes time frame. Let's say our 30 minutes time frame is our entry position. Let's see what price do at 30 minutes. This was the low, that's this higher low. This was the 4 hours higher low that I was waiting price to break before we can do anything. So once price break it, and then you're waiting for return, so the return have to be on 50%. Let's say we draw this from this our Fibonacci, from the swing low to the swing high. We'll see that the 50% price will retrace about more than 50%. Price reach on our 78.6 Fibonacci percent, which is where I'm anticipating price to reach before we can take this trade. So I'm going to delete this Fibonacci. So I'm going to draw this zone for our entry. You can also enter a risk entry if you want to. A risk entry is whereby price touch to the zone, that's where you will be entering on a trade. So if you want to enter a risk entry without not waiting for more confirmation, you will be entering from here. Let's say this is also a confirmation entry, because before price taps to a zone and then push back, please, it will you miss a lot of it. Let's say you want to enter, you have to wait for price to break this low, which are this low that I'm seeing. So I have to zoom it a little bit. So this strategy works in all fixed pairs. You can use this strategy, supply and demand, to trade any of your currency pairs or any of your commodity which you want to trade with, or your favorite pairs. So all you need to do is to just learn it and study this video. If you don't understand this video, you can rewatch this video more to understand what I was explaining. So if you can see that price give us this 30 minutes high, low, higher low, then lower low, then break. Understand? You can see that this week break everything. So I'm going to extend it to here, because this is the low that I was anticipating. Or you can see that the week breaks it a little bit. So all you just want to see is for it to break it. Once it break it, you'll be waiting for your retracement points to enter your trades. So it broke it already, then your entry have to be on your entry have to be here. So once price reach here, that's when you'll be entering. You can see that price don't waste time. Once it gives you this confirmation, then your stop loss have to be below the zone. So why we put stop loss below the zone? Because if you are on a trade and price push you out, that means that this zone will be invalid, because it have already give us a confirmation. You can see the stop loss of this trend is very small. Then we target our first TP has to be on this our 4 hours low, break of structure. Then we target the highest high. So you always take profit when you are in a trade. Your first profit is very, very important when you are on a trade, because that your first profit, it's what gives you confidence. Let's say we target here as our first profit, then we're going to target also this high as our second profit. Take profit, then the last one have to be here. So the way you enter on a trade is also the way you exit. Some people find it very difficult to exit on a trade when they are already on profit, which lead them to leaving money in the table. So the way you enter with supply zone on a demand zone, then you exit on a supply zone. So that's the rule of this strategy. When you enter on a demand zone to trade for a buy, then you have to exit on a supply zone. Then when you enter on a supply zone, you exit on a demand zone. So that's where this strategy works. You can also use the week high of the day and high of the week as a take profit in this trade. So you can see the risk to reward. 1:9 risk to reward. 1:9 risk to reward. So this strategy is 1:9. If we want to capitalize after this trend have moved, you see that price will return. So this is another fresh demand zone that price created, which I'm going to draw. So you can see that I draw it and price taps to it. So once price taps to it, we are not going to take trades when price taps to it. The only thing we are going to do is wait for 30 minutes shift of market structure before we can take anything off the market. So we wait for this 30 minutes shift of market structure. So after shift of market structure, we also draw the zone. So from this candle, red candle week to the week. So there is your next entry point. So put your stop loss above the zone, then target your first profit have to be on the week. Here on the week, that's the first profit. Then your second profit have to be here. Whenever it reach, then you take all your profits. So you can see that this trade move in a good risk to reward. So we have to draw the zone that price will be rejecting. So you can see that price will reject once it reaches to this zone. So that's where we are anticipating price to reach. You can see that price reach it, and when you on a trade and price giving you higher highs, higher low, and reach to a certain psychological level or supply zone, then break that low. All you have to do that time is to just break even, or you just take all your partial profit, because that indicates that price is now going to your upside position. So you can see that price broke this structure, then retest this small order block. Then after retesting this small order block, you can see that price push back to our demand zone. Get to this channel, share and like.